Warm welcome to another week ahead video, guys. This week's video will focus on the upcoming RBNZ meeting scheduled on Wednesday, the 24th, where markets are in a little bit of two minds on whether the RBNZ will hike with 25 or 50 basis points with this upcoming meeting. Now, if you take a look at the Kiwi dollar's performance so far in the year, it just hasn't reflected what is priced or expected for the RBNZ. With a lot of the expected hikes arguably already priced, some analysts have recently turned a little bit more cautious on the currency as well, saying that, if a currency, given all of the positive data points, given all of the expectations for hikes, if all of that means the currency can't rally and outperform, then that certainly tells us something about the underlying sentiment towards that currency. Right now, we are still holding to more of a bullish outlook for the Kiwi dollar. We do think as carry attractiveness starts to increase with OCR expected to rise, that should provide some further support for the currency. But we don't want to be blind to some of these comments. It's definitely something to think of in terms of what's expected for the currency, what's already priced for the currency, and what realistically we can expect for it going forward. Now, for this upcoming week's meeting, the markets are pricing in 100% chance of a 25 basis point hike for the RBNZ. After the recent data, though, there are some analysts that's leaning more towards the possibility of seeing a 50 basis point hike, not a 25 basis point hike. Now, looking at some of that recent data, it's just been so much better than the markets as well as the RBNZ had expected. If we take a look at GDP, for example, GDP quarter-over-quarter growth far surpassed the RBNZ's projections, printing at 2.8% for quarter three versus their own expectations of 0.8%, a massive beat there. Inflation also popped a lot more, especially forecasted versus forecast rather. The bank expected quarter over quarter to print at 1.4. We came in at 2.2. Expected year-over-year metrics for quarter three to come in at 4.1. We came in at 4.9. So just a massive beat on the inflation front. On the labor front, even better, even hotter. Quarter three unemployment rate dropping to a whopping 3.4%. Now, just to put that into perspective, the last time unemployment rate was this low was back in the fourth quarter of 2007, which was just as the global financial crisis hit. So if we drop below that number, that'll be historical lows as far as our charts go back for Kiwi unemployment rate. In terms of the virus situation, there's also been some good news this past week with the PM announcing that the whole country is expected to end lockdowns from the 29th of this month and for the domestic borders to start opening up from the 15th. So that's another positive. In terms of the other macro data, on the housing front, the likes of ASB Bank, they do expect that the housing shortfall that's been part and parcel of the massive rising house prices, they do think some of that shortfall will start to be met within a year's time. But even though that's the case, there's still a lot of room left for house prices to continue to rise. We know that the RBNZ doesn't really favor using monetary policy tools necessarily to try and calm down the housing market. They favor tools like the LVR restrictions. But with the current elevated levels of house prices, financial stability is definitely in focus for the RBNZ in this upcoming meeting, and another reason for some analysts to expect faster policy normalization. Now, despite rising oil prices that we've had recently, the higher dairy prices means that terms of trade has remained very, very solid, another positive for the currency. And also looking at inflation expectations, printing at 2.9%, that was enough to see the bank acknowledging this past week that the OCR expectations have continued to rise in the short as well as the medium term. Now, the other thing that I think is quite interesting here for those calling for a possible 50 basis point hike is if we take a look at the timing of the meetings between the fourth quarter of this year and the first quarter of next year, after this November meeting that we get this upcoming week, the only other meeting we've got scheduled is 3 months away on the 23rd of Feb. So for some, that means that the bank would probably rather want to err on the side of being more aggressive with a 50 basis point hike, given the current global inflation trends that we've seen developing in other major economies. So that's something worth keeping in mind. And of course, given all of these positives that we've mentioned, the markets have been pushing up the terminal rate expectations for the bank, currently sitting at 2.5%. And that is, much higher than the bank's neutral rate or expectations for the OCR and their August projections of just over 2.1%. So that's definitely something to keep in mind going into the meeting. Now, despite all of these positives that we've mentioned, markets are currently pricing in close to 35 basis points of tightening for November. So that means that they're fully pricing in with 100% probability, pricing in a 25 basis point hike. But obviously, halfway to expecting a 50 basis point hike. Now, the reason why some has been pushing back against a 50 basis point hike and why consensus leans more towards the 20 side, if we take a look at this helpful chart from Credit Suisse, it explains some of that reluctance to price in more than a 25 basis point hike, because even though the policy repricing, if you take a look at 2022 and 2023 numbers, even though it's been very aggressive for the RBNZ, compared to some of the other major central banks, even though it's been very aggressive, if you take a look at the next chart, the curve going out into 2024 is the most inverted for most of the G10 currencies right now. And that implies a fast cycle of hikes with a possible cut later on, or after that cycle is being completed. So that does explain some of the reluctance we've seen from some participants not looking to just automatically price in a 50 basis point hike after we've had all of this positive data. Another point to consider, of course, is some of the previous comments made by RBNZ's Hawkish, where back in September, he explained that the normal way of doing things for central banks are by moving in increments of 25 basis points, not 50 basis points. And of course, that alongside their least regrets policy wording in the statement does reflect a hawkish tone, but also a careful bank at the same time. Now, with the recent resurgence that we've seen in various cases across the globe, especially the recent ones in Europe, with Austria going back into lockdowns, Germany possibly moving towards lockdowns as well as China's current slowdown, the RBNZ, they might not want to shock the economy by going out with a 50 basis point hike. That's also something that some analysts have pointed to, saying that there's more reasons for them to just stick to that 25 than trying to shock the markets. At this meeting, it will also include the bank's updated monetary policy report, like this one that we showed earlier. So what the bank could also decide to do here is they could choose to hike rates by 25 basis points, which would obviously disappoint those participants looking for a 50 basis point hike. But at the same time, they could go ahead and just upgrade their OCR projections to reflect a higher terminal rate. That would basically give the markets the best of both worlds. It'll provide the expected interest rate hike. Yes, not a 50, but a 25 basis point. But if they stick to a higher or upgrade their OCR projections, that'll still show that the bank has all the all the motivation to stick to their current path and obviously increase that slightly. So that might be a way to give both worlds something that they want. However, given the positive data, especially the recent inflation and inflation expectations, there are those like Nomura Bank who believes that right now the risks of an overheating economy should be enough to seal the deal for a 50 basis point hike. On the other side of that coin, though, ANZ Bank believes that the rapid rise we've seen in mortgage rates recently, as well as the more sober outlook for things like growth in the labor market, obviously compared to inflation, that means that anything more than a 25 basis point hike would just be an unnecessary shock to the economy and something that the RBNZ would want to avoid. So I think currently my baseline would be a 25 basis point hike with upgrades to the OCR, which should on balance be more positive for the Kiwi dollar, but it shouldn't be a massive surprise for the markets. However, we do need to acknowledge that with a 25 basis point hike fully priced in, if the bank then does decide to not upgrade or increase the OCR projections and just deliver a 25 basis point hike, which is already fully priced in, that could easily see some decent downside moves in the Kiwi dollar as well. Now, taking a look at some possible hawkish and dovish scenarios we'll be looking at. Firstly, we need to keep in mind that a 25 basis point hike is fully priced in, right? So in terms of hawkish surprises, the markets will only be surprised if they come out hiking by 50 basis points. That'll be a first possible hawkish tilt from the bank. The other one, like we said, is if they decide to increase their medium-term OCR projections, their neutral rate, or increase their 2024 OCR projections to higher than 2.1%, that'll also be seen as more of a hawkish tilt from the bank. And apart from that, if they change their tone on inflation to reflect concerns of an overheating economy, that'll also be seen as more of a hawkish tilt. That's basically them coming out saying that, hey, we're stressed about where we are right now. We're probably going to hike a lot more, but obviously that should be reflected then in a medium-term OCR projection upgrade as well. In terms of the dovish outcome, it's just the exact opposite, guys. Because a 25 basis point hike is fully priced in, if they just deliver that alone, it's not going to be enough to provide upside. We would expect downside for Kiwi 2-year yields, as well as downside or 10-year yields rather, and downside for the Kiwi dollar. In terms of dovish outcomes as well, if they leave that medium-term OCR projection, that neutral expectation, or the 2024 OCR projections unchanged at 2.1% and 2% for the neutral rate, again, expect that to be more negative for the currency going into the week. And if they stick to the same tone by acknowledging that, yes, inflation is higher, but we're waiting for more information, arguably that'll also be seen as more of a downside risk for the currency in the week ahead. Now, in terms of possible currencies to pair against the Kiwi, in the event of a hawkish outcome, we do like NZD CAD and NZD dollar. The reason for that is we think a lot of the positives for the Canadian dollar has already been reflected in the price. We do see risks of downside there. And when we take a look at the US dollar, a very similar story there. We think most of the recent positives is reflected in the price right now. And the dollar is arguably looking a little bit stretched from a technical point of view as well. So any hawkish surprises, we would like to try and use that versus the CAD or the dollar. In terms of dovish outcomes, we do like upside for both pound Kiwi as well as Aussie Kiwi. On the pound front, the recent UK data we had last week just reaffirms a December hike is possible from the Bank of England. That should provide further upside for the pound. Obviously, keeping in mind political risks, etc., in the week ahead. If that comes out, we won't be choosing the pound if there's downside risks involved with the political story right now. In terms of the Aussie dollar, we do think that with positioning still fairly stretched from the Aussie side, that could see a decent pop higher in something like Aussie Kiwi if we have a softer Kiwi in the week ahead. All right, guys, so that's everything from our side. We hope the video has been helpful. As always, any questions, don't hesitate to let us know.